Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the boys from Convoy. How you guys doing?
Good, good. How are you?
I'm doing well, man. Dustin, Jonathan, I appreciate you guys being here every couple of weeks, telling us what's going on in the non-QM space. So give us a general update. We talk every other week. What is going on in non-QM world?
So, obviously, when Dustin spoke last week, he was talking about how the markets kind of haven't shifted a little bit, but with Jerome Powell's most recent comments,
Yeah, you mean 50 basis points is coming?
yeah,
You mean that one?
he's his acceleration of everything and his unexpected acceleration of everything has kind of, it's kind of blown everyone's expectations and forecasts of rates and anything for 2022 out. Everyone expected real estate industry to be strong, and everything to be strong, and now everything's shifting, right? So with that being said, obviously non-QM rates have also moved.
Sure. Expect that. Yep.
Exactly, like a half, and it's kind of like everyone's moving. So you can't price a Fannie Mae Freddie Mac loan for investment property anymore. Non-QM's like, we're not going to be lower than them. They can't be. So everyone's moving up, and it's kind of crazy how fast everything is changing. But that's the current market as it is.
Yeah, I think Powell's, again, one guy's opinion. I've studied the Fed presidents back for 30 years. I think Powell is a little Bernanke in that he is going to tell the market what's coming and then do what he says. I truly believe he should have raised half a point last time, and I wanted him to shock the market or surprise the market. That's just not how he rolls. But over the last 4 days, 4 different Fed presidents, including Powell, have made it very clear that 50 basis point is coming May 3rd or May 4th. And there's a 63% chance now that a 50 basis points in June is coming. So yeah, if the front end of the curve goes up a point in 6 weeks, you have to expect the non-QM space to adjust. It's just how it works, right?
Yep.
Sure. Yep. It's all right. That was an interesting sound. What is that?
Oh, this is my phone. Sorry.
It's all right. Yeah. It's like, is that a computer? What is going on? All right. So it's a phone. Cool. So again, right. This is something to be expected. I would tell anybody, if you had a pre-approval, whether it was non-QM, traditional, conventional, whatever, that was older than 60 days, probably, 60 days, you need to call your lender up and get it requoted because the rates are up. That's across the board. VA, FHA, doesn't matter. Yeah. Powell last week or this week changed the game. Rates are up across the board. Expect it, plan for it. If you're in the one rental at a time community, adjust your mortgage payments, your largest expense. It's gone up. Maybe it takes a great deal to a good deal. Maybe it takes a good deal to an average deal. Just know your numbers. Know your cost of capital.
Yeah, I touch on that. I'd tell your clients or our clients, if it's older than a week, honestly, right?
Yeah. Yeah.
Well, because I had one yesterday trying to do a first time, home purchase, and I gave him a pre-approval last Monday, and he called me today, or not today, yesterday. Oh, no. And his buying power went down about 80 grand because of the rate hike. And I don't know, this kind of, it was making me, kind of think of the current state and the rush that a lot of current prospective first-time home buyers are going through, in that they always send you documents asking you for what's the max I can get, what's the max pre-approval. But in this market, I really try to stress to them, tell me what's the maximum payment you can afford first.
Yeah, that's a great advice.
We're going like, I don't see a reason with where the economy is headed for you to do the max I can qualify for. It's what can your family and you afford right now, and that's what I'll.
Dude, that is such great advice. I wish more and more mortgage brokers would do it. That's why people need to reach out to Convoy, because of that kind of honest conversation, right? I've been very clear in my channel. I think we've headed best case for some stagflation, which could be a year and a half. I actually think Powell will make not only Powell, let's just call it the Fed. This notion of a soft landing is a joke. They've not proven to do that before, so it'll be a hard landing, which means a recession. And oh, by the way, the last thing I'll say about recessions is they're natural. They're a natural occurring part of the business cycle. They are not fun, but they happen. And when it happens, they will lower rates again. And then maybe we go back and get a chance to refi or do some other things later. But yeah, I think that advice is spot on to really just protect yourself and your family, because you don't want that financial strain of being maximum right to the edge.
Yeah.
And a lot of how the mortgage industry does their ability to repay rule is based on gross income. A lot of times your W-2, if you're standard income, it's all it's all gross, not net.
Yep.
Right. So the $10,000 of gross income isn't really $10,000 of income you're taking home. Right.
No.
So that's something to keep in mind, which is why Dustin, what he talks about is truly accurate. But I think in terms of the market as it goes, you bring up an interesting point regarding rates potentially coming back down. It's I wouldn't like. Some people are like, I've talked to a few clients and they're like, I'm just going to wait for that to happen. And I said, it's not worth waiting for that to happen to roll the dice on that happening, because everyone's been spoiled at the 2 to 3s right range, that this is where we're basically supposed to be. And it's healthy for rates to go up with the market. It's healthy for rates to come down, and it moves across. But I would recommend clients not betting on
Thank you.
Come back down. And then also to keep in mind on a recessionary standpoint, it's like, if a recession happens and let's say rates do come down, there's also the aspect of home values coming down as well. So if you were going to wait for a refi or something for rates to come down on a recession, well, you probably can't do what you wanted to do previously, because the value of your home's probably lower, for that time period. So it's just, special things to keep in mind for clients that, may think about, I'm just going to wait this out. I don't really think it's the best time to be waiting things out at this point in time.
Yeah, let me be a little bit more clear, because you're right. My kind of rant on rates and recession and all that may have been misheard, because I wasn't very clear for the audience. I think rates are in the uptrend, and I've thought that for quite a while. I've done the 70-year spreadsheet. I've told you we had 40 years of declining rates. They're going up. They're probably going up for the next 2 to 4 or 5 years. So this is. Some people are telling me that deflation is coming and rates are going down by the end of the year, and I'm like, I don't see it. But I don't see it. So I think rates go up for quite a while. Again, I think recessions are natural. They will happen. There will be recessions probably once a decade for the rest of my life, right? They're just a natural occurring thing. And when I say rates going down, I didn't mean we're going to revisit the 2s. My guess right now, on whatever today is, the 24th of March, is the 2.7 or whatever we bottomed out at is going to be my lifetime low. I don't think we revisit that. In fact, I hope we don't, right? Well, how did we get there? We had a pandemic, and the freaking Federal Reserve bought $9 trillion in mortgage-backed securities. That's how the hell we got there. I don't want to get there again. I don't want to shut the economy down and have the Fed buy $9 trillion in mortgages. That's not healthy. So again, if we go all the way up to 6.5 and then it comes down to 5 3/4, it probably doesn't make a lot of sense for most of us to refi, because the gap's not going to be enough. So again, if the numbers work, do the deal. If the numbers don't work, don't. I think waiting for 30-year mortgage rates in the 2s again is not a great idea.
No.
Yeah. So
when clients say, I'll wait for rates to come back down, it's like we may see it's going to be a straight incline, from here, but there may be every 1 or 2 days where we have rates get better. So it's 1/8 of a point better than the previous week, but then it's back up again. That's the Fed's already alluded to it, right? I mean,
yeah, here's one for you. Let's see what you guys think about this. I think the chances are that we see 6 before we see a 3.
Not even a question.
Yeah. It's
gonna not even a question.
I'd put all your money on that deal.
Course, but that's definitely something I agree with, and I know John does too.
Yeah, I mean, the investment programs, like we're looking at a rate sheet from UWM. It's at I think the rates price out at like 6.5, and then if you go up, it goes up to 7 1/4.
Right now, today.
Right now, yeah, we're looking at it right here.
Oh my God.
7 1/4 at the top end.
Their par right now is 5.8.
Yeah, the par is 5.8.
Yeah.
So tell people what par means.
Oh yeah.
So this par is like basically if you are the most perfect fit client in the world. So this one, I'm going to look at it. It's going to be based on a loan to value less than 50%,
Oh my God.
a 780 credit score,
Oh,
no
okay.
cash out,
Okay.
single family residence, so can't
Okay.
be a duplex or 4 unit.
Yeah.
And the debt coverage has to be above 1.25 based on the PITI.
Right.
So I mean, like,
Fully burnt. Yeah. So if that's the best, that's an investment loan.
this is their DSCR loan.
Oh, the DSCR loan. So
Correct.
5.8. So it really quickly gets to 6.5, 7, as you guys were saying.
Correct.
Yeah.
Wow.
That's them though. I mean, we have
No.
obviously our other, the ones that we usually send business to aren't as high.
No, then that's why we were talking in video 1 about them just dipping their toe in, right? A 7% 30-year money is not going to get the deal done. You would clearly go somewhere else.
Yeah.
Very cool. So the other thing that's going on in the non-QM space, I'm hearing rumblings about LLCs, but I'm not sure if that's legit or not. What's going around that?
So, and some of our clients are running into it now, but as the market gets tighter and tighter, so is the lenders' guidelines on entities, because their biggest fear when entering into a market like this is foreclosures and
Of course
paying their loans. And obviously, the reason why people want to put in LLCs and have non-recourse and all of that is because they want it to protect themselves in case something happens, which makes total sense. However, if you as the borrower are trying to protect yourself, then so is the lender in a market like this. So LLCs are being over scrutinized more than previously, and this is across the board. Whether it's on the conventional, you can't even put in an LLC, but like the non-QM space across the board with all of our lenders, everyone's starting to be a little more fine-tooth comb, magnifying glass. We don't like this portion, we don't like that portion. They're starting to nitpick a little more than we've seen them do in the past, and a big reason is they're really afraid of people foreclosing on their homes and then being like, hey, sorry, it's LLC, sorry,
bye.
Exactly. So with that concern, they are really becoming a lot more conservative on that aspect. We can still do them. Just be ready for a little more scrutiny, or a lot more scrutiny, depending on how it was set up, right? LLCs, trust, all that. Yeah.
Yeah, and I think that's why you guys are on the channel, is just to bring reality to the world. I think a lot of people want to finance in an LLC for lots of different reasons. I think it's wise to tell them, hey, it's just going to take more time. And the reason you don't do LLCs now in conventional is because they got their asses handed to them last time, right? There's all kinds of articles you can go back and search about LLCs just, letting all the properties go in the last crisis. So it makes perfect sense that lenders want to protect themselves as well. It's frankly what should happen. And then lastly, so we've talked about conventional lenders kind of trying to make their way into your space, or the non-QM space. Obviously you do both. So yeah, you do both conventional and non-QM with their DSCR and other products, bank statement loans. Are there other products that the non-QM lenders are starting to think about or play with that would be kind of game changer and things that conventional lenders would never consider, or at least not considering yet?
I think by the pure nature and definition of non-QM, we have heard rumblings and some insider information, if you want to call it that there's going to be a new product that is rolled out in the non-QM space. Not sure if it's next week or next month or when it is in 2022, but they have to have some sort of separation between lenders and non-QM, because right now they're, everybody does the same thing, just some people are better at a certain product. But
yeah, one of the reasons something I wanted to ask you about, we didn't plan for this. I think a lot of folks are looking at home equity loans now because, hey, I bought a home 4 years ago, got a lot of equity, but I'm not going to refi because, I have a 2.75 30-year. How can I go get that equity? Does non-QM kind of play in that space at all?
So on home equity lines of credit, they do and they don't. So we have a lot of people asking because obviously if they do a cash out refi now, they don't want to get rid of their 2.875 or 3% first loan.
Mhm.
And they're like, no, we just want a home equity line of credit. I would run the numbers to make sure that it actually makes sense to, take a home equity line of credit, just because the rates are usually higher.
Yeah.
And through COVID, a lot of the banks stopped offering home equity line of credit,
Sure. Yeah.
So we actually do have home equity line of credit lenders that,
Oh,
we
cool.
run a lot of business through. We have one that'll allow, or either piggyback or actual true second on a primary or secondary. And then we also have one that's kind of special, that allows for like almost a second loan on a investment property, which not a lot of HELOC lenders will lend on investment properties, but we found one that does.
And just to be clear, I didn't know where this was going, but that's the product I think needs to come out. That's it's basic. Yeah, go ahead.
No, I mean, who's gonna, take their 2.75, 3%, 3.25%, whatever it may be, and try to do anything with that rate, right? That's gonna be the bulk of what you owe on your home. So the only way that I believe, and you touched on it earlier, that lenders in this space are going to be able to kind of help service those that are, looking to get cash out, is by providing a second, so that they could, or the client can feel comfortable without jacking up their first mortgage by 2-3%, because it makes no sense if you do that.
Yeah, that's where, again, I've been playing this game for a long time. There are plenty of people that are sitting on 30, 40, 50% equity, like legit equity, that are never going to refi. Cause like, I'm not getting rid of that 2.75. I'm not doing it. But if you can go to them and say, hey, I can get you 50 grand at 7%. I think that's a yes answer for lots of people. Right.
Yep.
So
Just for an investment property, right? That's the thing, right? So
that's what I think's coming. And that's just my one third party guy's wild ass opinion on YouTube University. That's where I think somebody's going to create that product, and they're going to be wildly busy, in my opinion.
Well, we already have it.
Oh, there you go.
Yeah, that's what I meant. Yeah, we already have it. We have a lender that will do investment property HELOCs.
Well, how do you want people to reach out? Because I know there's some people that are like, I'm going to test these guys out.
Absolutely. Reach out to email private client at convoyhomeloans.com. And, usually Dustin or myself will respond, and you guys will deal with us personally.
Well, do me a favor, guys. If anybody's going to reach out for them on this product, leave a comment on this video so I can follow up with you. Because again, I think this is a product that will start very nascent, but I think is going to be a big mover for folks. Because again, don't take your $300,000 mortgage at 2%, take it up to 6%. That's stupid. But if you want to go get 50K and have fixed rate terms, this might be a good way to do it. So if you're going to do it, let me know. I want to hear. Tell me how Dustin and Jonathan do. I'd love the feedback. Thanks, guys.
Thank you.